The consensus is that the Fed will go, but the Fed will be very dovish with their statement so that the markets do not get out of hand to the downside. The dollar index, last time we talked, I said we had 1, 2, we got a little bounce here, each bounce getting a little bit more anemic, but I believe from this 97 level, we have a third drive setting up in the euro, third drive to the top. So best guess is this 97, 96 and a half levels holds on any sell-off, and then I'd be looking for retracements in the Dixie for potential shorts in the dollar index back around the 99 and a half level. What I pointed out in the pound last week, the third drive to a top in the pound completed. We didn't quite do that yet in euro. That's going to happen around 111 or so. And then someone asked me where support was in the yen. I said 121. That's where it held. I said sell a rally back to the previous support. That was another winning trade in the home run ball, was the short side of the guppy. Everyone knows I've been constructive on the euro, more negative on cable. So recommended that the guppy was the preferred short on the cross, and that's making new lows today. So let's just move ahead and look at some certain areas. Of course, I'm going to be with you again prior to the Fed on Wednesday, but thinking that we get a third drive, we've had it in the pound. Pound still displaying relative weakness, and that here this 97 level was very significant support level. Breakout 97, only about 30 pips away from this, that we should get some type of recovery rally. Perhaps this will be the first wave from par 60 to 97, which would be 360. So halfway back would take you up towards 98, 80, 99. And then you're talking about perhaps a 200 or so point rally in the dollar. Maybe it comes in post-Fed or going into the Fed would be a selling opportunity in my view. Been telling people that we're getting closer and closer in crude. Crude is now near that 35 level, and we have our first divergence on the 1 hour time frame in Canada, so that's setting up as well. I was talking about 138, extreme case 140, and we almost got there. So give me a Y if you're with me on the Dixie. This was something that was forecasted. In fact, you caught the euro on this huge down day. And like I said, after a huge down day like this, the market has to back and fill and reset. And my best guess going into the Fed is that the dollar holds and we get one more fading rally. Give me a Y if you're with me. So moving over to the crude. I'll go all the way out to March. Crude on some intraday stuff is beginning to diverge. In fact, we're getting a little reversal day in the crude right here. I think that we could rally back towards this 42, 43 level. I think that would support the dollar as well. So weak crude is actually bearish for the dollar. It reduces demand since the dollar is the petro currency. And a stronger crude market would reflect into a recovery in the S&Ps, most likely a recovery in the dollar as well. Maybe back to this major breakdown up around the 42 to 43 level, which tells me there could be some decent scalp setting up in USD CAD to the short side and some type of top developing there. Give me a Y if you're with me. Let's move over to the gold market now. I would say that Feb is the most active month. Gold. Gold's having a hard time getting going. I did talk about looking for the potential of another low in gold. We called this divergence here. Looks pretty negative to me. So I still think you could be patient, even though we got that great employment number in the Aussie that took it up after Now that was another three driver that worked real well, and I gave you guys a cover at about 71.80, and we rallied back to almost 72.80, 73. Still looking for 71 in Aussie USD to be a better buying opportunity, buy zone for me. So perhaps a higher low once again in Aussie and a lower low in gold. Give me a Y if you're with me on that one. And then looking at the Treasury market, perhaps we get some type of sell-off again in the Treasury that's going to set up a better shorting opportunity in US dollar yen. So we have this rally and the yen came off. Maybe we get a pullback into the Fed and the yen gives us some type of rally. We have declined 300 pips in the yen, over 300 pips. So why not 1.5 back, maybe back to the 22 level again. Give me a Y if you're with me. And finally, the S&Ps. Still a lot of people looking for new highs in the S&Ps. They're trying to turn it a little bit here. So this was part of the weak dollar. Maybe with ABC, maybe we trade down a little bit more. But thinking that there could be one more decent rally here in the S&Ps and a rebound in the dollar. So dollars come off, S&Ps have come off, dollar bottom, S&Ps recover, crude recovers, dollar recovers. Everyone with me on the theme? Gold makes new lows, Aussie gets cheaper, setting up a higher low for a buy in the 71 area. Any questions on any of the outside markets I've covered so far today? And I want to really remind everyone that this is one of the most significant Fed meetings in a while. The news isn't going to be as much about, unless they do nothing. Market's expecting a rate hike, so it would be surprising if they didn't. The mover is going to be the statement after the Fed. And the markets will be here after both. Make sure your equity is. So we were okay to wait till the ECB got out of the way last week and we got that big break in the dollar. We had a chance to buy it after the interest rate decision with decent stop losses. So let's react to the reaction on the Fed just like we did on the ECB. And that was good for a 400 pip trade in euro and much more on Euro CAD, Euro Aussie, all the euro crosses. We were alerted to being at least not bearish euro at a minimum and at a maximum, that the euro was due for a short covering rally, clean out the one-way market and the buy stops above. Give me a Y if you're with me. Okay, great. And with that, let's move on to our instruments. We always start off with Euro USD. So here we are. Okay, so this was the ECB. We had plenty of time after going into the ECB to get long, and in fact, you shouldn't have been short going into the ECB. We talked about all these divergences. So what do we have happening here? I talked about after the first push that we had a confirmed high. Then last week I said we got our first divergence. Those that follow my methods know that it's not ideal if it's above 70, and I always wait for 2. Sometimes it only takes 1, but I normally wait for 2. So here we are. We took out this high by a bit more. I think we could maybe push towards 111. Here's the look on the potential 3 drive to a top formation. And I hope that this trade does work, because I don't think this is going to be the end of the dollar decline. I know a lot of people are looking for new highs in the dollar, new lows in euro, but the third drive line's coming in right around the 111 area. So that didn't surprise us. In fact, you can't rule out some type of spike that could take us to 112, 112.50, which was a breakdown of the daily line. So we're not there yet. I think eventually we will get there, but perhaps we get something short term here on a third drive to a top. and then look for some type of divergences to develop. I'd like to see the 4 hours stay under 70 and the 1 hour as well. And something that I've taught over the years, something called Turnaround Tuesday, where markets will follow through from what happened the week before. And your highest percentage day for a reversal is Tuesday. Old timers like me call it Turnaround Tuesday, so perhaps we get this Turnaround Tuesday. I wouldn't be looking for a home run ball from up around 111 into the Fed, but perhaps 108 and perhaps as deep as 107 and a half, 107, because I still don't believe this is the end of the move. We're just getting stretched out a little bit here, and I can't ignore the non-confirmations we're beginning to get. So at the minimum, this is saying at these new highs, be careful with longs, and at the maximum, we're looking for some type of reversal in the euro, which ties in with the euro pound approaching the third drive as well. Something else I talked about last week, we're getting this pullback after the first drive. I drew this line last week. We're not that far away. Comes in around the 73.30 level, 73.40, and then perhaps we get a correction in that, and that's going to say favor shorts for at least a little while in the euro and longs in the pound. But something I did give you some advance notice on last week was a potential top in the pound, a 3 drive to a top formation in the pound, which really worked well. Here's a high Friday. So actually, there were 3 within the last 3. So let me just zoom out and you see what I'm saying. Okay. So really, this was 1, 2, 3 all the way back here. Something I pointed out, right? Okay. And within the third, we had 3, right? This was 1, this was 2, and within the third drive, we had 1, 2, 3. So what I was pointing out in the pound is that it had some more negative connotations. I still believe that. You have a rising wedge, right, that we broke down from. Could get back there and retest it around 52.70. We have a confirmed low here, which rules out, doesn't rule out the fact that there could be another low. So my preferred short on strength would be in the cable. This third drive was good for close to 100 pips or so, 120 from the Friday divergence. That at this point I was just forecasting last week, but said we could move up here towards that 52.30, 40 area, and we come off quite dramatically. In fact, look how much the pounds come off while the euro is making new highs on its way to setting up a third drive. So because I was more positive the euro and negative the pound, this was another big trade from last week. I don't think it's over. I think there could be rallies, but if I'm more negative, if I'm bullish euro pound, I'm more negative the pound than the euro. So the euro yen held. Someone asked me what I thought it was going to do. It held more like a pullback action in euro yen, way above the highs. But I talked about the guppy being vulnerable for a break down towards the 181 level, and talked about shorts right in here around the 85.5 level, and again at 85. So this was good for about 250. I don't think we're done yet. Breaking this line here at 360. I think we're headed towards this 181, 180 level. So this was another call that was spot on. The guppy being the preferred short over euro yen. Give me a Y if you're with me. Okay. So now let's take a look at the yen. So everyone knows I was looking for 124. I was looking for a third drive here, which we never got. We only got up to the 23.66 level. I was looking for 24, but the break got going in earnest. So I forgot who was here was saying, where would the hold? And I said around the 121 level. Low was 21.06. And I said sell it back at new old support becomes new resistance. That was another good call up at 122.20. That's at 122 to 122.5. So you have another 170 pips there. So we're getting the inverse in the end, like we're getting in the euro. We're getting a 3 drive to a top about to develop in euro. We got a 3 drive to a top in the pound. And now we're starting to look at a 3 drive to a bottom formation developing here in US dollar again. Here's the look. Here's 1. Here's 2. And here's 3. And above 30. So I actually think there could be a pretty good recovery in US dollar yen. So if I just look at some fibs, let's call the high that 23.60 level, and we could get back up to 22 again. Maybe this time even above this support resistance for a while up towards this 22.40. Anyway, here are the fibs. Take it from the 360 low, and we'll just project that this might be the low right here. So I have confluence up here at the 61.8 and the 200-day moving up around 22.40. So if I'm right about a recovery in the market, recovery in oil, recovery in the S&Ps, then we should be looking for a recovery in the yen. So there could be potential scalping opportunities here. Starting to get a little bit of a falling wedge look to it here. If you just take it off this peak, you have a nice little wedge developing here. The rule on wedges, if I'm taking this as a top line of a wedge, the rule on wedges is that wedges don't retrace only 38%. They don't retrace only 50%. They don't retrace only 61%. In fact, the rule on wedges is that they can retrace 100% of the move. So if I'm anchoring the formation from here, it means that there's a possibility of challenging these highs, and here you go, 22.44 would be the next level I would be considering shorts in the yen in the upcoming weeks. And it could be good for a counter trend trade, just like the pound was to the downside, and just like the euro could be, and just like the euro pound could be from that 73.40 level. Give me Y if you're with me. And you see this third drive formation setting up here in the yen. So you have the downtrend here and you have the uptrend here. Nice little divergence setting up in the yen. Everyone see that? Take a picture. So it's the opposite of the pound, where we had a rising wedge, which is a reversal formation to the downside. A falling wedge is a potential reversal formation to the upside. Give me a Y if you see it. It's textbook here. So here's your falling wedge, and here's your rising wedge. Everyone there with me? So let's take a look at the Aussie. There were a couple of good trades in the Aussie from up here. This was another third drive right here. And I used a 2-week off number saying 71.80 was the cover. And then we had this big employment number report in the Aussie right here. So we pulled back to 71.5. I don't know what to do with it unless I get some type of pullback into the 71 level. I didn't know what to do with it here. I knew to tell you to cover it here and look for a rally to sell. This was a dramatic rally on some very bullish employment news in Aussie. And right now, to me, it's a neutral territory. I'll kind of go with the gold and say that I'll leave it alone. But I would be interested in being a buyer in the Aussie around 71 to 70.80. As you can see, the gold's about to make new lows, and even if the Aussie pulled back to this major trend line here towards 70.80, it would be 1, 2, 3. It'd be the third high or low in the Aussie, with gold making another new successive low here, and has been making successive lows up until that 1050 range, and we have that bounce towards 1080 or so. So Aussie is a buy to me, but not up here. I guess if we start breaking out over the 73.84, you got to go with it because it's an ascending triangle, so a lot of triangles popping up here. It's not my style. Maybe the Fed interest rate increase will give us a chance down here at the 71 handle or lower. Give me a Y if you're with me. On Aussie USD. And you know, sometimes you don't see a trade. What do? You do nothing. So last week I started talking about Canada, so it was premature to short it. We kept having new highs. We confirmed these highs. Here's your first divergence. Really? I guess you could call this one from here, but this is pretty glaring here. And people that know, and I also showed it to you on the weekly. I got very macro with you last week. So here we are. We're still diverging. Here's drive 1, 2, 3. Second time that we've made lower RSI peaks. 4-hour diverge this time after going over the 70 level. And this was pretty glaring. This is pretty glaring in the 1-hour time frame. But everyone knows that I prefer to wait for one more. So just an area that it may set up from. And on these wedge lines, you never know if we're going to have a throw over. That if you sell the line makes you want to throw up, but this would be 1, 2. So I believe it's coming in around the 138 and change level, 38. So let's see what develops into the Fed. Up towards this 138 level, this just like I said, we could have a dollar bounce that could be supportive for USD CAD, but starting to finally not confirm the highs on the 1-hour time frame. So here's your first chink in the armor on the bull case in CAD, but it's my view you have to wait for more than one momentum divergence to develop. So I want to see a new high, see what kind of readings we get up around the 138, 138.5 level. Give me a Y if you're with me on that. So the other home run balls were the Euro pairs. The Euro CAD I talked about before the ECB. It was huge. I'd be booking Euro CAD now. I would love to see a correction in Euro CAD. I think this is a potential very significant turning point here. And we could have some correction with the CAD being close to a peak and get some type of fib retracement of this recent rally. Similar situation in Euro Aussie as well. Euro Aussie did not have the same type of momentum that Euro CAD had, or Euro Yen. But we are beginning to diverge here in Euro Aussie. I think up around this line, there could be a decent short up around the 153.80 level. That's a couple hundred pips from here. And then be looking for some type of retrace of this fairly dynamic move. I said I was looking for a rally back to old support. I actually got through it. So maybe this is wave 1 or A to be followed by a B or a 2 after we hit those targets back down around 48.60. And I have confluence there. Give me Y if you see the Euro Aussie. The Euro Yen, like I said, is completely opposite look to the pound. We have confirmed highs up here, a little divergence, but to me it looks like it's really just marking time. We should get another surge up in Euro Yen. To me, this has a bit of a flag look. We start penetrating these moving averages at 33.30. I believe we should take out these highs. Potential target in Euro Yen is going to come in around here. For those that bought this pullback because of the confirmed high, potential targets are up around the 135 level. Give me a Y if you see it. You don't have to agree with me. Just want to make sure that you see these areas. We'll see if we get to any of these areas prior to the Fed on Wednesday. The overall theme is perhaps a shade lower in the dollar over the coming days. We have a potential third drive to a top setting up in the euro. Third drive line comes in around a shade under 111, 110.90. Still believe that there could be some more downside left in the pound. Rallies back towards 52, could be decent shorts with stops over the high. This still, if I consider this to be the anchor of the rising wedge, as long as we don't close back within the wedge, I think there's a chance that we could retest these lows actually. And the yen, we're starting to get the inverse look. Potential third drive to a bottom with potential of a dollar rally that could take the yen back to 22.5. Canada's starting to show a chink in its armor with the first divergence we've had in quite some time. Look at this reading, 80, and this time we failed at 70, so we're alert for potential topping formations in USD CAD, along with bottoming action beginning to take place in the crude oil market for at least a bear market rally back to about $42 from 35. Also the euro pound, which I've been constructive on for over 300 pips from down here. Now it's starting to run out of some juice. Here's drive 1, here's drive 2. Perhaps it's got 73.40 in it into the Fed. And then I'd be looking for some type of correction again back down towards this 71 area before we launch one more time towards 75.5. So some decent calls last week. The best I would say was the Guppy. You see what it does up around this 183 level, old support, new resistance. Anytime you have 100 plus pips on any of my analysis, you have to take half and then tighten up stops. Same scenario in the yen. Said sell it back at old support, new resistance. That happened the day after our webinar. And here we are. And now the picture is turning constructive in the yen for potential bear market rally in the yen. Although I'm sure there are some bulls saying this is an important level in the yen for a move back up towards 125 to 29. We'll take things a step at a time and see this divergence here as well. Just a quick look at the Aussie yen. I'm thinking there's one more shot down. I talked about it here that we'd have one more shot down. I still think we could get one more, maybe towards the 85 level, if I'm right about a 71 Aussie. And that's pretty much all the pairs that I normally cover. Be patient, let the market come to you. Don't chase anything. Try and have all your trades cleaned off before the Fed announcement on Wednesday. I'll see you prior to that. Any questions before I say goodbye on anything I've covered or on anything I haven't covered? Okay, great. Thank you for your attention. I'll be back with you again on Wednesday. Thank you, RoboForex, for giving me the opportunity to teach, mentor, and share my analysis with your clients. Take care, everyone.